let's yeah, I wanted to talk a little bit about um earnings and implied volatility. So we had for instance, let's see where pull up some of the after hours. We could look at Alphabet, go to the after hours. So yeah, we had a strong positive reaction to earnings on Alphabet, which is up significantly after hours. So that's the light blue shading that you see here. Here's the earnings release. Stock, let's see, we closed at the bell at 171.14. It's trading up at 180 and some change. So let me go back over to the daily time frame. Um, so we talk a lot about implied move, right? And using that as a tool around earnings. So if we go to we're here to Google. The and Thinkorswim provides this here. You'll see the three little M's, which I think stand for money market move. Um, and then of course you can look at the expiration cycles in the options chain. Um, this is Friday's expiration. So this is going to, since we had quarterly earnings released after the bell today, going to incorporate 3 more days of trading. So that number is gonna be a bit higher. It's a little over 11, but most of that was expected around. So this 3M number is it when there is a quarterly earnings release or a major company announcement. Thinkorswim provides this metric. Again, you can just use the options chain as well to get a rough idea, or use the at the money straddle. But um, the so there are all kinds of scenarios, right? Sometimes the implied move is not reached, so it's overreported or overestimated. Sometimes we hit it right on. Sometimes we blow through it, right? A lot of things, but generally over a large series of numbers, large sample size, it tends to be pretty accurate. So, prior to the release after the bell today, uh, this was the implied move, 10.66, and we got pretty close to that, right? So again, if we go to after hours, right, we closed around 171, and we're up close to 181. So the options market did a pretty good job of handicapping this move. Now we'll see where the stock opens tomorrow and where it actually trades during equity market hours tomorrow. But in terms of after hours, it was pretty spot on. So that's a big move, right? Big percentage move. So the temptation is, well, it might be to buy a call or buy a put in anticipation of a big quarterly earnings move. But what you end up facing is volatility crush. So when I'm building earnings trades or doing, trading in any way around earnings, even if it's just the underlying stock, um, I want to always be cognizant of implied volatility. I'm going to put this up on the chart. Because of volatility crush. So if you're an option buyer, you can get a move in the anticipated direction and actually lose money. So like if I thought, as it did, Alphabet was going to spike up on their earnings release, buy a call. Well, there's a fairly good chance you could buy that call and get the spike up in the share price and lose money on the call, and that often occurs due to volatility crush. So if you look back at prior earnings releases, so these are going to be your little blue light bulb here, right? Notice how when we lead up into a quarterly earnings release, implied volatility steadily rises. Yeah, there's the release. And then once the release occurs, it very quickly falls off a cliff and it drops. So once again, there's the steady rise, there's the drop off. All right. And this is why it makes buying a single leg directional option around earnings very difficult. Because this inevitably happens in every quarterly earnings release. Okay. But there are other things. It's not just quarterly earnings. Any event that's going to increase the expected move of an underlying security, in other words, increase the implied volatility, is going to result in, if this is a binary event and it's like a quarterly earnings announcement, once it's out, that uncertainty is now gone. It's going to crush the volatility. So volatility crush, in other words, when let's see, sorry, let me right drawer there. When implied volatility is elevated due to something like a quarterly earnings release, right? It's going to drop, right? That's called volatility vol crush. Now, with implied volatility being a major component of how options are priced, with a direct correlation, so when IV is high, we have options are more expensive, relatively speaking, right? And notionally, so expensive. And when IV is low, options are relatively cheap. So this helps us structure the appropriate strategy around implied volatility. So when implied volatility is elevated and options are more expensive, remember, we want to buy low and sell high. So we want to look at being an option seller during high levels of implied volatility. And that's kind of counterintuitive. You would think, well, if there's an expectation of a big move in the underlying, it seems risky to sell an option. But remember, implied volatility is can have a greater impact on the premium or the price you would pay for an option than the actual underlying movement, the movement of the underlying share price. And that's kind of the what I'm pointing out here, the case I'm making. So when implied volatility is relatively low, it's more appropriate to be an option buyer, okay, because premiums are less expensive. So the common mistake is, like when we looked at with Alphabet, okay, they're reporting earnings after the bell. The implied move is significant, right? So go back over to the options chain, right? 10 points. Okay. The temptation is to try to take advantage of that with a directional trade. And that would be, buying a call, buying a put. But what I prefer to do is harness that information to my advantage. So know what the implied move is and use an option selling strategy. Or at the very least, an option strategy that doesn't also have theta decay working against you. So like you could do a butterfly around earnings. You could, there's a number of strategies you can use. You could sell an iron condor, right? Those are net premium selling strategy. You could do a long butterfly though, and actually have theta decay working in your favor. But the key is when IV is high, you want to look to be an option seller. So when it's low, so like if you look at the implied volatility chart, and it helps just to really zoom out. We're looking at a year's worth of price data on Alphabet. Look back at periods of low implied volatility. Okay, when it was down. This isn't something you have to be precise on. You can just eyeball this. If you look when IV is low, Okay, so what do we know? We know that we can buy options for relatively cheap, on the cheap, right? Okay, I'm just going to draw an arrow straight up. Um, so this is where if you're going to buy just a single leg call, okay, you could actually potentially make some money on this rise in the share price because you got it at a relatively inexpensive price. When as and then as like a long call buyer, single leg long call, this rise in implied volatility will benefit your position. So it'll cause it to increase, not just because the share price is going up, but because implied volatility is going up. And when implied volatility gets to relatively high levels, again, even if you're not trading the option, that can be an indication of maybe an appropriate time to, get out of a long position in the shares. Or if you are trading the option, this is where you want to look at, being a net option seller. Okay, so selling an iron condor or selling a strangle. Number of different strategies you can deploy there. But the takeaway is it's really critical you understand implied volatility, what it's telling you in terms of whether it's more appropriate to buy or sell an option. So I always tell people be very cautious about being a net option buyer around a binary event like quarterly earnings. In other words, when implied volatility is elevated. That can, again, create opportunity to be an option seller. And we combine that with all of our other tools and methodologies, indicators that we use. It can give us a really, really big edge in markets. Okay, so you want to kind of look for these things to coincide. Let's see if there's anything else I wanted to touch on that. But this and again, this is on Thinkorswim, but on your respective platform, you can add this to your chart in whatever way your platform allows. It's very helpful to have implied volatility plotted below your price chart. So as you're building trades, planning trades around, price action or a buy or sell signal or whatnot, you can incorporate that into your trading decisions, right? Whether you're going to be a buyer or seller of options. So just thought that was important to emphasize now that we're kind of in the thick of earnings season. So I'll pause there to see if there are any questions around that.
Let's see. Nothing specific to you. There's a handful of questions about symbols. Let me see what's in the Q&A.
Yeah, and we'll get to take a roundtable here just momentarily. I'm also going to just quickly show you guys the price action pivot indicator.
PJ says TOS gives you an ability to model a position with an implied volatility crush of
Yeah,
top.
yeah, that is true, PJ, and that's a very useful feature of Thinkorswim, where you can actually incorporate volatility crush into your, like when you're doing a simulated trade and looking at the risk graphs and stuff. That's true. That's something we could possibly look at in a future session.
Trader asks, is there sort of a percentage that you may identify to use saying a high or low? He's asking about volume. Is that volume or volatility? There's a VOL.
Volatility, yeah. I'm assuming volatility.
Same.
Um, yeah, so so like if you're looking at like an individual stock IV, uh generally kind of, I would say maybe around 50% is kind of the line in the sand. As an option buyer, I'd like to look for pretty low levels, like in the 15 to 20% range. When we're up in like the 40 to 50% range, more likely option selling strategy is more appropriate. So you can use the specific percentiles, but I find that the IV graph, I mean, obviously it gives you the percentile over here on the right, and you can just hover your cursor over here and see what those are. But to me, the graph is very useful because you can actually treat this just like a price chart. You know, I can take one of these IV lows and draw a support line just like I would on a price chart. And you can see like back here in December, we were down at low IV levels. And we didn't come back down again until early March. Okay. But, you know, a single leg long call right there would have done really, really nicely as IV increased up into the next quarterly earnings release and price appreciated. Then we're back down. We're back down there again until a few months later. Again, buying a call would have given you a nice opportunity, single leg call here as IV rise. So I find it useful to really look. Yeah, you can use the percentiles as well, but to really look at the more of the trend, just like you would, you know, on the IV graph, like you would on a price chart.
Bill asks, is there any like ideal time frame to consider when looking at this? You want to stick to the daily or does it
Um,
matter?
yeah. So, yeah. Typically, this is going to be on a daily time frame. Um, so like when you're building an options trade, you're not going to probably see any meaningful fluctuation intraday. Obviously, volatility changes intraday, but when we're talking about implied volatility, that's looking out in terms of days and not like minutes or hours. So
They said, yeah, thinks that makes sense.
yeah, yeah, and I saw a question on the metals, like um, so we had some consolidation going on for the past week or so, like in gold. Gold broke out to the upside here today. I haven't looked at silver. Silver's kind of more in consolidation mode, but yeah, the metals are kind of either beginning to break out or consolidating above key support. So again, like we do on the major indices, mapping out these key levels, but like silver is hovering, you know, above this 33 support level. It looks like I mean, that's now held for about 7 sessions, looking like you know, the metals want to push higher. So kind of consolidating above key support.
Mike asks, do you know why sometimes implied volatility is listed as infinity sometimes? Like it's sometimes it's buy options for tomorrow that calls under 571, he says.
No, I'd have to see what you're talking about. I'm not sure. Not sure I've seen that.
Yeah.
Um, yeah, I mean, implied volatility is unbounded, so theoretically, there's no bound to it.
Did an email and screen chat. Okay.
Yeah. Yeah, and I'm gonna pull up. Let's see, because I saw PJ. I guess I can just click right out of here. The price action pivot indicator. So again, this is now available in our Zillion platform. Right here, price action pivots pro. Go ahead and add that. So looking at the US cannabis ETF here. Um, so this indicator will, again, we just rolled this out. We'll plot key pivot points using our proprietary pivot point algorithm, and give you entry stops and profit targets. So just in the and I love to use these two together, the trade trend indicator and the price action pivot indicator. So we had a bearish, those will be indicated by a red down arrow. And if it's a confirmed, they won't all be confirmed or triggered. So you might see some pivot arrows that don't actually follow through, but the shading will indicate that there was follow through on the pivot into the entry level. And then of course, that's also indicated by the trade trend indicator. So there's a recent bearish price action pivot, again, where we had here's our pivot candle on October 23rd. We had two lower highs to the left of the pivot, two lower highs to the right of the pivot. There's our confirmed pivot. There's a couple methodologies. The indicator is customizable, so you can go into the settings and customize how you want to do this. The default is the lowest low of the candle on the bearish pivot would be your entry level, but you can also set it like to use just the two candles to the right of the pivot, which actually would have coincided with our trade trend sell signal since that was an inside candle. So we had perfect confluence here of a trade trend sell and a bearish pivot on MSOS US Cannabis ETF. But we'll get into the price action pivot indicator in more detail in future sessions, but that is now available in Zillion. So excited for that.
Jonathan, is there any reason why it says pro? Is it a difference or?
Yeah, so the we have two versions. The pro version allows you to change the user input, more of the user inputs. So like I just mentioned, you can change like where your entry level is. You can change the risk reward profile. We have it defaulted to a 1-to-1, but the pro version allows you to change like if you want to have like a 2-to-1 reward to risk. There's a lot of different user inputs. That's the pro version.
While you still got it on there, can you look at MSOS with it? PJ asked a little
That's
earlier.
what we're looking at right now.
Oh, you did. Okay, I'm sorry, I missed
Yeah,
it.
yeah. Um,
Gotcha.
yeah, and we'll look at more of these obviously. Get digging deeper. I'll keep it up on the chart for ticker roundtable, and we can kind of reference that as well. But yeah, this is MSOS. Um,
So
I
I got
can.
another. Yeah,
Oh,
Charles
let's
is
come back.
RKT.
Okay, yeah, Rocket. This is when we had a bearish signal on sell signal on. Um, that didn't end up triggering. So we had a sell signal back on October 21st. And then we ended up just getting a bunch of consolidation with no follow through into the entry. So there's not currently any signals on RKT. I was looking for this one to break to the downside and close below ideally the 16 level. We didn't quite get it. But there was a bearish price action pivot opportunity back in mid-October here. So there's our bearish pivot. So the entry here, this actually caught this down move before the trade trend indicator gave us the pending sell signal. And we did easily hit the profit target on that one. But I thought it was still a good sell signal here that just never followed through and triggered. Although today we did get, even though the signal is no longer pending, we did get a move down and then a intraday reversal. So in this case, just looking at this, we did get a bit of a bullish reversal off of support here. So if you look at some of these highs back in May, June, July, this is right around kind of the 1575 level. We revert, and this is why it's so important to monitor these support and resistance levels. But there was strong resistance here, which is why I was really waiting for it to kind of get through this 1575 to 16 zone. So near term, if this level holds, we'll likely get a pull back to the upside, rotation higher. There's some overhead resistance around the 17 to 1750 zone. But over more medium term, stocks in a significant downtrend. It's making a pretty well-defined series of lower highs and lower lows. So I would really watch this 17 to 1750 zone. If we break through that, and probably more specifically, I mean, we'd really have to get above 19 to really conclusively say this downtrend is over. But those are the levels I would watch on RKT. If we happen to break today's candle low, then this one could accelerate if we can get through this support level, accelerate to the downside.
All right, Ravi asked for SMCI.
All right, super micro. Okay, so we have a pending buy on super micro here. This up here. Uh, Pretty rangy. Obviously the stock got hammered back in July, August, and then has kind of been stuck in this range here, kind of roughly between 38 and 50. So we do have a pending buy signal from today on SMCI, uh, which, based on some of the stuff that's going on in the company, probably not a stock I want to own. But anyway, consider there was also a bullish price action pivot here, which did trigger on today's move up. But overhead resistance to contend with. So if the stock can push through this overhead level of resistance, it'll have get out of this range, maybe a better chance, but certainly a level right around 50 to watch for false upside breakouts and downside reversals. The stock stays in the range, then could be just a rotation lower back down, or back down to the lower end of the range. So it doesn't look real favorable for directional trades, but more of a ranging opportunity until we break out of this channel that it's in. We'll keep you guys posted next week on whether we push that out later in the week. We'll have to see what our calendar looks like. And if for some reason we don't meet, we'll have a very exciting session, whether it's later in the week or at our normally scheduled time the following week on Tuesday at 7 Eastern, because we will have the election behind us. We'll have all these quarterly earnings behind us and a lot of exciting stuff to take a look at in the market. So hope to see you guys on our next one. We'll keep you posted. In the meantime, trade safe. Take care. We'll see you soon.